All right. Let's begin, guys. Welcome everyone to the Thursday live stream. Hey, 3 likes. Awesome, awesome. Okay, it seems like my mic is working perfectly fine. Okay, so welcome guys, welcome. Hopefully you guys are having a great night so far. Yeah, let's just go ahead and get started right away. Now, if you guys haven't read the title or even the description box, I highly recommend you guys do that before the live stream even begins. But just as a quick summary of the current objectives of tonight's stream, we're just going to be going over 2 of the swing trade ideas that were perfectly executed, which were, again, those ideas were from Monday night's CFO Swinger Watch report. And I want to go over SPY and IWM, so the overall broader markets, and compare it to what's been happening on the underlying conditions of small and mid caps, which are considered laggards, right? So basically, a comparison between the leaders and the laggards, right? So with that in mind, let's go ahead and take a look at the first ticker here, BIRK, BIRK, right? This is Birkenstock. This is the footwear company. And as some people like to call it, the Jesus shoes or the Jesus sandals, and apparently they're very, very comfortable, and it's one of those high-end brands for just footwear. And today they've had an amazing reaction to earnings as they had a double beat, and I believe they raised their guidance on sales and profit margins as well, if I'm not mistaken, or maybe I'm mistaken it by a different earnings report, but I believe that was the case for Birkenstock. But again, I'm not going to just go into all the details of the earnings. I want to go into details of the reasons why we were looking at BIRK, and then the second swing trade idea, Ralph Lauren. Okay, so hey, welcome guys, welcome. For anyone who is new and it's just jumping in right now, make sure you guys smash that like button down below if you guys are enjoying my live streams every single Tuesdays and Thursdays, and of course, if you guys are able to apply the valuable and applicable information that I give you guys every single stream. Okay, so I'm going to give you guys a little treat here and show you guys the CFO Swinger Watch report from Monday. And again, it was a very short week, which is the reason why we started the week with, starting on Tuesday. And so this is what I said for the market summary, okay, of this week's report. So at the last paragraph here, I said this. So I said, now what was particularly interesting about this specific price action in each leading group was that the footwear/apparel industry remained strong. In fact, despite the slight market weakness that we saw last Thursday, this entire group was barely affected by the overall market price action. So that makes me want to believe that investors and traders are starting to line up their positions in this specific group, and that is why we will be doing the same thing by looking at some very strong technically and fundamentally tickers this week that are involved in the footwear/apparel industry. And that led us to, okay, these 2 swing trade ideas, Ralph Lauren, okay, and BIRK. And so far, these 2 tickers provided such a great and just overall tight consolidated ranges for us to really want to trade both of these 2 tickers. And let me first talk about BIRK here. First of all, BIRK, leading into this very short week, we saw a very nice tight flag and just overall great consolidation since its IPO. So it's made a nice base between 50 and 42. So it's a nice wide range here. But in between this range, since last week and a couple weeks before that as well, we were tightening up really well. And in fact, today's, not just today's, but this entire week's price action was the actual 3rd leg up move from the first retest of this 42 lower range support level. And so obviously I took that risk of holding into earnings today I believe that earnings pre-market, and obviously we got in on Tuesday, and I was personally able to get in at a very nice price around 48.50, and obviously I missed the preferable entry point over 48.20, but then again, Tuesday was a nice gap up for this name, like with every other and all the other leading footwear / apparel names. And this one was able to push up higher without making new lows at open, since the low of Tuesday was at 48.37 over the preferable or desirable, I guess, entry point over 48.20, right? So we were able to push up higher, and yesterday I took half off, and then today we got that nice open at 57.00. Okay, and I took all the position off for, well, this entire position. Right? So that was BIRK, and then for RL, Ralph Lauren here, this is yet again another very, very nice and tight chart pattern here, where we formed a nice base between 165 to 171, but from a broader perspective on the weekly time frame, we made a nice base between 159 and 171. And from last week's earnings reaction, and obviously the entire last week's price action was defined by the earnings reaction and the day that followed the earnings reaction, which ultimately ended up with a nice weekly hammer candlestick. Very nice long wick at the bottom, very nice body candlestick body at the top here as well, which allowed me to want to believe and just presume that the price can continue to go up higher, and that's exactly what it did. And in fact, it continued to be attracted by this previous gap down area that I also mentioned to my readers and members, and today we finally completely filled in this gap at market open. So this one was another great swing trade, as the entry point for this one was just a simple long entry point over the previous high of the day, which was last Friday. So this one was a huge winner as well. Okay, so if you guys want to know roughly the return here, since my entry point was also around 174.50, okay, right around here. So it's over 5% or over 6% here, right, or over 11 points. So this is a pretty good drive up higher for such a short week. All right, now not just on these two tickers here though, this entire week has been completely confirming what I've said on that market summary of when I mentioned that these specific leading groups like the footwear and apparel industry were holding such great relative strength. Well, you know, the market this week just really just confirmed that, as today we had some other apparel brands or companies like GPS, right? After hours today, when we saw that nice push up higher, and I believe it closed around like 27 bucks. And another popular leading apparel name or company was, well, ticker symbol ANF, or Abercrombie and Fitch, right? Huge move yesterday to earnings reaction. And I believe this was the 5th largest price range day for this specific ticker here, right? And this is a huge move. It was a move over, I believe, like 26%, and it closed around 24.32% yesterday. So this is a really big move, and that makes me want to believe that, you know, tickers like, you know, Lulu, which I mentioned on Tuesday's live stream for a potential mean reversion trade, can move back up higher. And again, if you guys haven't watched that Tuesday live stream, make sure you guys go back and watch it. Right, hey, what's up guys? Welcome. And again, if you guys are enjoying the information that I'm giving to you guys right now, make sure you guys smash that like button. It really helps out with the YouTube algorithm to just, it really tells the YouTube algorithm that you guys are enjoying the live stream, you guys are enjoying the applicable information that I put out there. So if you guys can do me a quick favor, you know, smashing that like button down below will really help with the live stream and the overall channel. So Lululemon here, definitely, it's one of those tickers that I'll be hawking for a meme reversal to the upside, and also it has earnings coming up as well. So at this point, I am expecting, half expecting to see any type of bad news that might come out from this earnings report to be priced in. But if we do see another drive lower due to the earnings reaction from this earnings report, I wouldn't be unhappy. I would actually be very happy because I would want to buy that dip into that earnings report reaction. Okay, so again, what is the lesson here from what the CFO Swinger Watch report said for this week? Well, we need to follow the constant flux and oscillations of the market. And what did the market tell us last week? That the leading apparel and footwear industry or groups were showing the most relative strength, and we should be focusing on that entire industry or group this short week. Okay, and I can give you guys even more examples, especially for footwear, right? Crocs. Whoops. Crocs. And this is another nice move up higher. I could have given this one as well on Tuesday, or well, on Monday in the report, but this one was less tight and less attractive compared to the other two tickers, BIRK and RL. So Crocs was another example. On these are the popular running shoes, excuse me. Right? So this one also had a nice move up higher this short week so far since Tuesday, and it just continues to show that we have been looking at the right industry or industries and the right groups for this week. Okay, hey, what's up? Hello. All right. Hey, thank you guys so much for the likes. Awesome. Okay, so again, if you guys missed out on my Tuesday's live stream, make sure you guys go back and watch that. It's very critical that you guys watch the live stream on Tuesday because I talk in depth about Lululemon and the reason why we need to be looking at this one for a mean reversion, and based on the macro perspective of our singular trade ideas for this week, BIRK and RL, we can clearly tell that from the macro perspective, these groups or the entire industry of footwear and apparels or apparel companies are very, very strong. Okay, and so on the backdrop of that macro perspective, Lululemon can become another potential winner. All right, now let's move on to the next thing that I want to talk about. Okay, SPY and IWM. And again, make sure you guys read the description box down below. As always, right, you guys should be reading that description box down below every single time before the stream begins. Alright guys, let me just get some more water here. Be right back. Okay, so SPY and IWM. Now, why do I want to talk about this? Well, first of all, this entire week has been pretty interesting, right? So, for example, today's price action was, in particular, very strange and very interesting at the same time. Why? Well, first of all, the market breadth was really improving. How do we know this? Well, not just the leaders that were moving up today, we saw the laggards moving in tandem to the upside, and IWM was very, very strong compared to the S&P 500. In fact, today, the S&P 500 ended up closing negative 0.66%, while small caps IWM ended up closing positively at 0.95%, almost 1% at the close. And this divergence is very interesting because as we were seeing laggards having really good relative strength, which I also mentioned when the market was live to my readers and members, it was really odd to see that the overall markets like SPY just completely bogged down and not really reacting to the upside. Yes, early in the morning we saw a nice pivot as we retested the daily 21 SMA, but throughout the rest of the day, it wasn't able to gain any type of a bid from the buyers to push back up higher and possibly fill in. Well, it did fill in the low gap up here, but to try to at least go right back up and stay over this lower range support level of 524. Now, if you guys remember, we have a new range to consider here, 524 to 532. So make sure you guys remember these two lower and upper range levels. All right, so that was particularly interesting to me because when we do see just the underlying laggards continuously improving, we tend to see leaders also moving in tandem to just show that the overall market breadth is strong, and that's exactly what we saw today. But there was a clear divergence as the market's price action did not indicate that at all. In fact, if you're only focusing on the market today, you would have believed that market breadth or the market internals were weak, but that was the complete opposite as the market breadth continued to improve throughout the end of today. Okay, so obviously the market breadth kind of moved back down from highs at the close, but again, it was very peculiar to see that the market price action was not reflecting the overall market breadth recovery and strength. So what does that tell us? Well, as I've also mentioned in the Wednesday market recap video of this week, again, it's that new Hump Day market recap series that you guys should be watching. I mentioned that I want to be looking at IWM again as we head into the end of quarter 2 and as we head into early to mid quarter 3, because I would say for the entirety of quarter 3 at this point, from a macro perspective, I would want to have a long position on IWM. Now, I truly believe that IWM will see another dip as we head into the end of quarter 2 and into early quarter 3. And at that point, I would want to see a nice long-term position that we can potentially profit off of into the end of this fiscal year. So all the way into the end of quarter 4. And I really truly believe that we can be seeing some really good outperformance of the small and mid caps or the overall laggards for the rest of this year, right? So at least the half of this year. And based on how the price action is currently going with IWM and comparing it to the overall markets, it seems like there is a good chance that we can be seeing that divergence where the leaders kind of take a breath, and even just based on the horrible earnings reaction that we saw from tickers like CRM on one of the leaders, and even after hours today, MangoDB or MDB, it's clearly a sign that some of these leaders are wanting to pull back, right? They're truly wanting to pull back. We're seeing some long-term and obviously short-term profit taking come into place for all of these leaders, and we're seeing that profit taking moving into all the laggards like what we saw today. And this should continue for the last half of this year, which is the reason why, again, the final reason why I want to be looking at IWM. So at the very minimum, I would want to see IWM completely being defensive at this $200 strike support level. And again, it is a support level here of $200 because we are above it. But if we do slip below it, I will want to continue to add onto a potential future position if I do get a nice bounce entry at $200. But if it does, again, dip below 200, I will want to continue to add so that we can profit off of a potential last half of this year run for small and mid caps. All right, so hopefully that made sense, guys. Okay, so again, I mean, I've shown you guys a very good sneak peek of the newsletter for this week. I give you guys the entire reason why we were looking at BIRK and RL. So make sure you guys remember this, and kind of just the reason why we're looking at this, these two industries or groups, the footwear and apparel industries, and kind of get an understanding or gain an understanding as to why we're looking at specifically BIRK and RL compared to the other footwear slash apparel tickers, and excuse me, and just from a technical perspective as well, because again, BIRK and RL was showing the most attractiveness from a technical scale and level and perspective, as they were making very nice high tight flags like BIRK, and the other RL was making a very nice convincing move to the upside. Okay, and all we did for RL was to get in for the continuation of that upside move, and for BIRK, all we needed to do was see a nice decisive breakout into earnings, and obviously we held that risky position into earnings, and that paid off really well as well. Alright, so with that in mind, guys, make sure you guys remember this divergence that is currently underway with IWM and SPY. We're going to continue to see these wild sector rotations that we saw this week, especially with the footwear and apparel industries or groups, and we're probably going to see some really wild whipsaw action as people go in and out rapidly in between different sectors. Okay, so we might be seeing more people coming into defensive sectors one day, and at the end of that specific trading day, we might see some profit taking from those defensive sectors, and then the next day, we might see people coming right back into the leaders like growth and tech stocks, or just overall sectors that are involved in that industry of tech. Okay. Right, so that is my fair warning to you guys about such whipsaw sector rotations and just the underlying divergences that we have begun to see in this short trading week between the overall markets and the small and mid caps, right, and the overall market internals or breadth as well. Okay, so I kind of want to and excuse me, guys, Jesus. I'm really straining my voice tonight. Jeez. I gotta drink more water. I mean, I guess that must be it, right? I mean, I haven't really drank enough water today, so my body is literally telling me to drink more water. Well, yeah, guys, I mean, I just want to have a nice, short, succinct live stream that really just goes over why we chose BIRK and RL to swing trade this short trading week, and trying to give you guys a reason to why we were looking at it and why it worked out so well, and why it can continue to work out well in the next few trading days or even weeks to come, based on how the other tickers that are involved in that same footwear slash apparel industries have reacted to their own earnings report, or just overall based on their technicals, right? So hopefully you guys are able to really understand and gain a perspective as to why we chose BIRK and RL specifically from a macro fundamental perspective and from a technical perspective as well. Okay, so if you guys are new here, make sure you guys subscribe to the channel. And if you guys do subscribe and hit that subscribe button, make sure you guys also hit that notification bell, which will pop up after you click that subscribe button. And why do you guys want to hit that notification bell? Because, well, you want to be notified when I am live and also when I have uploaded a new video that is full of valuable and most importantly, applicable information. All right. Now, and last but not least, if you guys want to join the CFO Swinger Watch newsletter and become a reader, and on top of that, become a private member of the private CFO Discord community, make sure you guys DM me on Instagram at chartsfocus1, and you guys can get 50% off for your first 31 trading days. All right. And I do have some more footwear / apparel industry tickers that I will be giving out to my private members and readers of the report tonight. So if you guys want to know what those tickers are, and I'll give you guys a hint, it's 2 tickers. So if you guys find it, or if you guys want to guess, DM me what you guys guess. But it's 2 tickers that one might be easy to actually find, but the other will not be easy to find. But I'll just leave it at that. But if you guys really want to know what those 2 tickers are that are involved in the same industries that that we have looked at and executed on this week, make sure you guys DM me at chartsfocus1 to receive your 50% off discount for 31 days. Okay, so with that, have a great rest of your night and good luck tomorrow, and thank you so much for watching.